Welcome back, everyone, and welcome to How to Short series. In Links Your Trading Instinct, we're shorting Apple, we're shorting Nvidia. We're buying the gaps on Nvidia and we're buying the gaps on Apple. That's what we do here. We just focus on these two strategies. We're building our framework. We're refining it. We're getting our timings right. We're doing good. We're doing well. So let's jump into it, shall we? Here are our short selling guidelines. This is really a high-level structure on how we make sure we look at the correct setups. And I forgot to give you the bonus in the last video, so I'm going to make sure I do it in this video if I don't forget. But so we want to look for stocks that are at all-time highs, right? And that are going to pivot. And how do we know that they're going to pivot is by the time frame. So we look at the intraday charts, the 15-minute, the 1 hour, the 2 hour. We're flipping through those time frames, and then we're finding some breakdown candles or gap craps, etc., some bearish signals, and we're basically using that as the trade against, right, to manage our risk. So let's jump into it. Okay, so it was an interesting day today. Here we go. We're looking at the Apple chart right now, and let's zoom in and. Pretty uneventful, but we did manage to pull some profits. So in the pre-market, I sold some at 15. I think it was 145.75. We're gonna take a look at the spreadsheet, and basically, we shorted some yesterday. I think it was at one. We'll take a look at the spreadsheet exactly where we got in and got out. But that was a quick trade. So as we're holding our position, we're shorting it, so we want to make money on the downside, but we also are making money in between. We're buying and selling as we're following that price lower and lower, because that's what we're thinking right now. And if we can make money in between, let's do it, right? And that's what the strategy is all about. So the short selling combined with the gap trading, it gives you that flexibility to do a lot of cool things in between and manage your risk, etc. So let's zoom in a little bit here, just so we can, I can show you a little something. And so this is part of the gap trading strategy. So where there's a gap, it normally gets filled, and where the gap begins or ends is where usually there's support or resistance, and you can trade against that. So here we didn't trade against it today. It just gapped down, so we just sold what we had yesterday, and we just kept that position open, the remaining that we had from shorting, I think 148.70. So we opened here. And look at that, we retraced back to the previous close. So the principle, our guiding principle on gap trading is you can actually put in a short here because we filled the gap, and it would have been a great risk reward because you're looking, maybe it's this candle or that candle depending on your tolerance, right? So you would short it here, and then this would be, you'd be trading against these two candles like 50 cents here ish. So as soon as you start closing, in this area on a 5-minute, 15-minute, hourly close, those time frames, that's your signal to say, okay, well, I'm going to manage my risk and just get out. But it just crashed down. So that's 146, and it went all the way down to 144.30. It would have gave you more than enough. The minimum requirement is 1%, and that's and you're looking here at $1.50, $1.40, and that's exactly 1%. So it would have gave you that trade. But that's if you want to get really technical and really precise about things. Those opportunities are there for you. We didn't do it because we were already in the money in the morning. Like before the market even opened, we were in profits because we sold our position that we shorted yesterday. I don't know, I think somewhere around here. But today we just killed time off the clock all day. We didn't do anything. It was tight trading range. So we can look at it in two ways. So we're prepared for either scenario. One, this is definitely a level, 147 is definitely a level of interest and of resistance, right? And then the next level would be up around here, 149. These are just on an intraday basis, right? These are levels that we may want to look at tomorrow because we still have that short position open. And if we start, trading up into these channels here and breaking through and hanging out here, we will be looking at closing our short. However, and this is in the scenario that this is a, if you want to talk about patterns, continuation patterns. In the scenario that this is some type of bull pattern because we filled the gap, we're hanging in and around that gap. So we're in no man's land. It can go either direction. Regardless, we're ready. We're ready. So if we start closing on a 5-minute, 15-minute hourly close above 147, we'll be looking on getting in on a long to trade up to 149. And that all depends on is there a breakup candle high that we could trade against, right? So we'll have to see, is it going to gap up and crap, right? So there's those scenarios that we have to wait for it to unfold. But I think, in the bigger picture, so if we zoom out, let's get rid of some of these lines. If we zoom out to the, let's go hourly. Let's see what this looks like. Similar. So what we could be, so a perception that you can have is that this is a bear flag, right? This is a bear flag, and then it broke out to the downside, and we're just going to continue. That's an option. That's your A, B, C wave. That could happen. If we look at on a daily chart, we definitely have a change of character. We have this uptrend, and then all of a sudden we fill the gap, we gap down. That's a sign of a trend change. A gap down. We haven't had a gap down and having trouble to recapture those highs in almost a month, over a month. So that's a change in character. And so again, in this time frame too, you can see maybe it doesn't go all the way down to 137. Maybe we just go and retest these lows here. Could have some kind of head and shoulder pattern. I don't like to get too much into these patterns and because they tend to not work out as often as you think they do. That's why I really stick to price and I just trade off of the candles like I'm showing you here on this chart. But that's my analysis. We have an inside day today. That's bearish. We didn't close new highs. So we'll see. We will see. There's no call. We just right now we saw that pivot high. We're in short and we're keeping that until the market tells us that we're wrong. And basically it's an emotionless trade because we're in profit right now and we have a stop loss to stop us out. If it does go above the price that we shorted. Let's take a look at the spreadsheet and see where we're at with things. So transitioning. And here we go. So we're still open 30 shares here at 148.70. We still have that open because we're waiting for that second move down to then also buy back at 137. So that's what we're going to do. So part of the strategy is we're shorting, but we're also buying at these levels. So we're being because we're confident on our strategy, we can do that, and that can really push you to the next level in trading. So we've had a rough start here with Apple. We tried to pick the top. So picking the top cost us, $438. That's how much it cost us plus commission, which is, so we're looking at $480. It cost us, so we're around $500. It cost us to figure out where that top is. And so far, we have to make that money back. So to do that, we do need to hit that 137 mark would be nice. So at 130, let's do a quick calculation. So that's we'll do $10. So that's $300 plus 150 plus 33. Yeah, so that'd be 483. So we would be breaking even on that. So what we may want to do, and this is a lesson that we're going to be adding to our gap and short selling lessons. Size, the size of share that we're doing. How does that impact our trading? We're looking at our profits here, and it's not we are getting good trades, but we're not getting the profits that we want. And so that means that we may have to increase our size. We're just going in with 8,000, 9,000. So we may want to double up on that. So with leverage, you can do that. So most brokers account give you anywhere from 50 to 100% or 4 times. So you can get you can get the leverage you need if required, depending on the account that you have. And that's something that a video that I can make later on, different accounts and the setups that you can subscribe to. So that's all I wanted to cover today. Hopefully you enjoyed this video. Hopefully you learned a little something. Comment below, subscribe, all that good stuff. Remember, this is not financial advice. I'm just showing you how I pull money from the market on a regular basis, how I improve my strategy. This is a framework for you to take your trading to another level. Thank you for watching. See you tomorrow. I didn't forget, here's the bonus content. We're looking at MRNA. This was pointed out by someone in the comments. They were looking at shorting this stock, and it's fitting the criteria. Really, it really is. So I'm excited. We did short it today. So this is part of our Patreon tab, where I put in those levels of where the stocks that we're looking at that are ripe for our strategy. So before I get into the nitty gritty of the intraday action, let's move it to let's see a daily chart. So we've had this high wave candle here, so we have some level of uncertainty. It's gone parabolic. It can definitely go higher. Why not? But we have heavy volume here on this high wave candle, just really at the high. So this could be capitulation, but inverted capitulation, right? It's at a very high point, and the volume came in here, and so we could be looking at some kind of top. It's overextended a little bit. It's gone up pretty fast, pretty high. So we're positioning ourselves to take advantage of the price retracing back to 260, filling that gap, and that would be huge. So let's zoom in here and show you what we did on a daily basis. So this is 15-minute chart. Let's go to the 5-minute chart. And on this 5-minute chart, you can see here, right off the bat when we opened, and I talked about this on Apple, where it gapped lower, it filled the gap, and this is a shorting area. And we took the short at 308. I think it was at 308. What is this here? High. Yeah, so we took it at 308. So at 307. Yeah, sorry, 307. Because it filled that gap in this area. And then we had our stop loss was basically, this is a little bit more than the 1.5% that we like, but 317. So you'd be looking at $10. But this stock moves quite a bit. So we got in there at 308, 307, and it came back down to 295. This is where roughly we got out, half of our position, and then we kept the remaining to see if, will there be follow through to the downside? There wasn't. You can actually see on the 15-minute chart. That's why we like to flip through time frames, that it was turning around. So I think at 304 or 302 or something like that, we'll see in my spreadsheet here, if you're a Patreon subscriber, you would see exactly where we got out, and we could just continued higher. And because we are looking, we are using this as a bear flag pattern. So down, we have this breakdown candle high. So if I increase the time frame to 1 hour, there it is, right? This is a big, it just, took over and more, it came into not the previous day, not only the previous day, but the day before that, right? It can just crash right down. And that's why we're looking at shorting it. It seems to be a change in character. It's in an uptrend. That's, the main force here. So I'm not surprised if we trade higher, and it is what it is. We'll just look at it. We're going to look for another breakdown candle like this to trade off of. But technically speaking, that looks like a top. You have a breakup candle, two little spinning top dojis here, right? If we, put it on a 2-hour chart, tweezer, right? Like these are like candlestick patterns, but regardless, is what we do is trade off, keep it simple. This is a breakdown candle, and that's what we're trading off of. So there you have it. And so we shorted here at 314, 315, 314. We had shorted at 314 here, and we're going to place another short here at 330. So for the other half of our position. because we really think that we can see some pullback here to 260. So that's a $60 share move, and that's what we're looking for. We want these big moves. That's how you make the big bucks. That's how you grow your account. And to do that, you need to be patient, and this strategy helps us to do that. We'll see what tomorrow brings us. Right now, the after hours is minus $2. So either, again, is it going to be a bull flag? Is this, a reversal to test these highs and then we go down? Or, is there a lot of weakness here and we just go down? Or do we blow through? We will see. If we start closing candles here and start hanging out here on the 5-15-minute chart, I will be looking to buy the breakout for maybe a $10-15 move or something like that. So there's always possibilities. I'm not set on one idea, but it's gone up so high. We've got to break down candle. That's part of our strategy. So when we see something develop, we have to action it. Hopefully you enjoyed this bonus analysis on Moderna, and watch it with me, follow it with me, and hopefully you can profit off of it with me. Thank you for watching. See you tomorrow.